Thank you. Thank you so much. It's a pleasure to be joining you today. The topic of building an inclusive and equitable future is a very timely one, especially during this pandemic. And today I'm going to focus my remarks on the role that women and gender-based policies can play in building this future, in securing such a future. Malala Yousafzai, who indeed represents our future, said we cannot all succeed when half of us are held back. So it's particularly encouraging to be able to speak today to a group of female leaders and directors. Whether you realize it or not, you are already playing a role to help foster the resilience we will need to get through this crisis. Why do I say this? In 2017, IMF research showed that banks with higher shares of women board members had higher capital buffers, had a lower proportion of non-performing loans, and greater resilience to financial stress. Staff also found the same relationship between bank stability and presence of women on banking regulatory boards. Having served as the vice president of the BDDK, I can testify to the importance of diversified views in good decision making. Another IMF study, which looked at 2 million firms in 34 European countries, found that greater gender diversity in senior positions was associated with higher profitability of firms. And the study also found that one woman in senior management or on a corporate board is associated with much higher return on assets. So as these analyses show, increased female representation and diversity in senior positions is not only the right thing to do, it is also good for the bottom line. Our managing director, Kristalina Georgieva, said in a recent blog, what is good for women is ultimately good for addressing income inequality, economic growth, and resilience. Yet we still have a very steep ascent ahead. Even before the crisis began, the global average female labor force participation in 2019 was about 20 percentage points lower than male labor participation. And unfortunately, the COVID-19 pandemic is likely to exacerbate gender inequality. Women are more likely to work in face-to-face jobs that have been more acutely affected by the social distancing measures. And because of the nature of these jobs, teleworking is not an option. In the United States, about 54% of women working in social sectors cannot telework. In Brazil, it's 67%. In low-income countries, it's more than 88% who cannot telework. Women are also more likely than men to be employed in informal sectors in low-income countries. Informal employment, often compensated in cash with no official oversight, leave women with lower pay and without labor law protection and benefits such as pensions or health insurance. Women also bear the brunt of family care responsibilities. Even before the COVID crisis struck, women performed on average 2.7 hours more unpaid work than men per day. In many instances, the burden of household work for women has increased as a result of the shutdown measures such as school closures. After shutdown measures have been lifted, women are slower to return to employment. Among parents with at least one child under the age of 6, men were roughly 3 times more likely to have returned to work than women. Pandemics also put women at greater risk of losing human capital, which is a big concern. In many developing countries, young girls are forced to drop out of school and work to supplement household income. According to the Malala Fund report, the share of girls not attending school nearly tripled in Liberia after the Ebola crisis, and they were less likely than boys to re-enroll at school or go back to work. And so without education, these girls suffer a permanent loss of human capital, sacrificing productivity growth and perpetuating the cycle of poverty among women. So how can we build a more inclusive and equitable future amid these challenges? And this is very critical because policymakers play a very important role. They need to adopt measures to limit the scarring effects of the pandemic on women. This could entail a focus on extending income support to the vulnerable, preserving employment linkages, providing incentives to balance work and family care responsibilities, improving access to healthcare and family planning, and expanding support for small businesses and the self-employed. To help women, this can include increased access to finance and addressing the gender gap in financial services, eliminating the legal barriers to women's economic empowerment is also a very high priority. So far, only 41% of countries have introduced measures to protect women's economic security in the face of the pandemic, but some countries have moved quickly. For example, Austria, Italy, and Portugal and Slovenia have introduced statutory rights to partially paid leave for parents with children below a certain age. France has expanded sick leave to parents impacted by school closures if no alternative care or work arrangements can be found. Latin American women leaders have established a coalition of action for the economic empowerment of women as part of a wider whole of the government effort to increase women's participation in the post-pandemic economic recovery. So these are all very good measures, and such policies can be designed to tackle gender inequality by creating conditions and incentives for women to be able to work and contribute to economic outcomes. These policies are not only crucial to lift constraints on women's economic empowerment, they are necessary to promote an inclusive post-COVID-19 recovery. So let me turn now to financial inclusion, using Turkey as an example. Back in 2018, while I was at the World Bank, we found that only 54% of women in Turkey had a bank account, compared with 83% of men. This 29 percentage point gender gap is three times large as the average gender gap in emerging economies. In fact, Turkey has one of the largest financial inclusion gender gaps in the world. One challenge to closing the gender gap is that 89% of unbanked women do not participate in the labor force. The same is true of unbanked men. The good news is that the digital technologies are presenting an opportunity to expand financial inclusion and help us close the gender gap. In Turkey, about 9 out of 10 women have a mobile phone, potentially offering convenient access to digital finance and opportunities for transformation that could take place through digitalization. In my role as the United Nations Secretary General's Task Force on Digital Financing of Sustainable Development Goals, we have been exploring how digitalization can help tackle the world's most urgent development challenges and promote greater growth and inclusion. And COVID-19 has only magnified and amplified this mandate. We found that both public and private sectors, the COVID-19 pandemic has created new opportunities for digital financial services to accelerate and enhance financial inclusion amid social distancing and containment measures. In the private sector, businesses have also moved quickly to leverage the power of digital technologies. These initiatives will help all, including women who lack basic access to finance. But countries must invest in digital infrastructure and digital identity so that their citizens can access online services. I want to end on a positive note. There are ways, big and small, locally and globally, that can make a difference and help build an inclusive and equitable future. While things may seem at times daunting, the pandemic also presents an opportunity, the greatest opportunity of our lifetime, to usher an inclusive and equitable future. So let us make sure that women have their equal share. Thank you very much, and I appreciate the opportunity to contribute. Thank you.